tell me a little bit about some of the trends that are happening in private equity in China.
Okay. Currently, in the last year and this year, most likely the new China private equity funds that are being created are renminbi funds, RMB funds in local Chinese currency. And that is because, number one, there's so much liquidity in China. Number two, the CEOs themselves realize that they can have access to funds much more quickly than to wait for US dollars to be converted into renminbi. And also they must get regulatory approvals from MOFCOM and SAFE and CSRC, and that takes anywhere between 3 to 9 months to a year. So having immediate access from renminbi funds is much more attractive, which is the reason why there have been so many new renminbi funds created in China.
And which includes your own.
Right.
So you must have tons of demand.
Well, it's happening very quickly. We are one of the earliest renminbi funds that was created in 1999. I'm a partner at Sino-Century, China Private Equity. We've done and completed our Fund 1, and yes, there's a huge demand for our type of business at the moment locally.
I'm very interested in the local market, in the Chinese market, what you're seeing there in terms of investment, what types of investors and what sort of trends are happening.
Sure. We focus on the SME, small, medium enterprise, and I personally happen to believe that's really the heart of China. I feel that in the last 25 years, the SOEs that were created by mega funds created the infrastructure that allows the SMEs now to really take off and to flourish. So in my personal view, the SMEs is the most attractive sector. Also, a few weeks ago, at the front page of The Economist, there was an article called Bamboo Capitalism. That was on the front page. And they compared the returns of SOEs, both in return on equity and also in terms of growth rate. And it clearly showed that SMEs' growth rate, in terms of the ROE, let's start with ROE, is 10 points higher than the state-owned enterprises. In terms of growth rate, it's roughly 30 to 35% on average. So clearly the SMEs are much more attractive have a much more attractive investment proposition than the state-owned enterprises.
Which industries are hot right now?
A lot of the industries coincide with the plenary session that just finished the 5-year plans. The government's what's called the encouraged sectors happen to be consumer-oriented, technology-oriented, green-oriented, and in our firm, our three focus is first is financial information and services. That's 50% of our funds, clean technology, sustainable environment, and high-end manufacturing. And China doesn't want to only make toys and shoes anymore. They really want to become innovative. So this is an area that the government is trying to encourage.
And it's all tied to the macroeconomic picture in China. Describe that for us right now. We see fast growth, 9%, 10% range. Is this something that's going to continue and you feel this when you invest in companies?
As I mentioned, in the last 5-year plan, which is what the government does every 5 years, they want to slow down the growth rate. It used to be growth at any cost. They really did not care too much about safety nets, about human rights, the health of the individuals. Now they do care. So they've lowered their targets from about 8.5 to 7, 7.5. Remember, their target was 8.5, and yet they were growing 10, 11, 12%. So the 7, 7.5 may mean they may slow down to anywhere between 8 to 10%. So it's a slower growth, but also at the same time they're providing many more benefits to the rising middle class, the 300 and 400 million people that we've seen that have risen, and they're aiming to create the next 400 million middle class.
Quality
versus
quantity.
Growth, right. But I think they're getting it both, actually.
How do you tap into the booming consumer, which the government is stimulating and you said is obviously one of the hot growth areas?
Right. Well, there are a huge number of private equity funds now focusing on the consumer area. Our specialty is in the financial information services, and it's slightly indirect to the consumers. So for instance, in our new fund, we're going to have a call center that takes a lot of the calls from credit card people, or actually Apple and IBM use these call centers, the leading call center. With mobile banking, individuals in China in particular use their phones for many, many more purposes more than the United States. So those are the areas that we tap, but clearly majority of the China private equity funds are aiming to cater to the consumers in China.
Are you not concerned at all about the record credit growth and the risk that poses for banks?
Remember, they have a huge reserve, and also banks' assets are growing quite exponentially. And so I think the last I heard about the issue with the possible default is anywhere between 1.3% to 3% of total assets. And yet the assets are growing 15, 20%. So I think there is an issue, but it's contained.
Is there a credit bubble?
I don't know. I'm tending to say that I don't think so, but I think the concerns about the real estate bubble or stock bubble or credit bubble, I think there's a lot of talk about it, but there's really no clear evidence that neither of is evident in either of the areas.
When it comes to the consumer, one of the risks discussed is inflation, discussed by the government itself.
Yeah, that's a clear area that the government is very concerned about. They just raised their reserve again for the 10th time today. And inflation is clearly on top of their minds. Their projection now is about 4.5% for the rest of the year. If that is the case, it's soft landing. Everything is okay if we're in the 4.5%, but that's clearly an issue.
What is the biggest risk to facing the Chinese economy as you see it in your business?
I think it's the huge discrepancy between the affluent and the poor people. Right now, GDP per capita is between $4,000 to $5,000, but there are a lot of people who are making a lot less than that. And you've got about 140, 200 billionaires in China. I mean, people who are willing to pay 1 million renminbi for one Tibetan Mastiff dog. They're willing to pay $24 million for a Mouton Rothschild. So, and yet there are people who are probably living on a couple dollars a day. So the government recognizes that. They want to recycle that funds, and they're doing as much as they can by providing incentives, providing interest rate rebates, allowing the second and third tier cities to expand as fast as they can.
This is the number one risk?
In my mind.
Because we've gone through inflation, we've gone through the banks. Just one more on the banks. Do you think they're capitalized well enough in case of a shock or some sort of bust in the boom that we've been seeing?
Right. I'm not a bank specialist. I don't know enough, but I am told over and over again that between the reserves and because the banks are linked to the government, they're very well protected. They have a lot of cushion. The assets are growing exponentially, so that I am told and I'm advised that this is not something that one needs to focus or worry too much.
And then in terms of, you work in the United States, you also work in China. What are some of the big misconceptions about the macro risks in China right now, in the United States?
I think the way the Americans, we have just gone through a terrible financial shock, which was caused by a housing bubble. And so one can't help but think that something similar might happen to China. But the reality is the average Chinese, their debt structure is very different. They don't borrow that much, and also in terms of percentage that you have to put down to buy real estate in China, it's a fraction of what Americans have to pay. So overall, America was over-leveraged, the government and individuals. In China, you don't have that kind of leverage.
So no housing?
I don't see a bubble.
You don't see the risk?
I don't see a bubble.
And the other, so you mentioned the banking sector. What were the other consumers indirectly through banking? The other hot industries that you're looking at?
Green energy. Remember in the Copenhagen summit a year and a half ago, China has committed that by year 2020 they will reduce their carbon footprint by 40-45%. I mean, I go there every winter and to look at SME companies, and they literally sit in their coats with no lights during the daytime. And at first I said, what is going on? Do you have a power shortage? And they're trying to preserve their electricity power. This is a nationwide decree. So they're really making a huge effort. So when I get CEOs that come to the United States and I take them up to skyscrapers, the first thing they say is, why are all the lights on when there are no people? And they're much more conservation oriented than we are here. And also in terms of wind power and solar power, China is already the #1 manufacturer. It's a little bit too expensive to sell locally within China, but they will in a couple of years. But they're very mindful of the fact that that's really also a top priority for China to be green and to reduce pollution.
Growing faster than the United States, that sector?
Much faster, much faster. And the other area is technology. Yes.
And manufacturing.
Well, manufacturing, I think we've seen sort of the sunset in terms of manufacturing. They realize that rather than make low-end manufacturing, clothing and toys, etc. They really want to go into high-end, and that means alternative energy, whether it's new battery for cars, whether it's energy-efficient areas, whether it's green cars that run on electricity.
Do you see that happening?
Without question, much faster than the United States as well, because the regulation allows very free flow of new businesses to be created. So we're looking at one company as the only company in the world that creates wind turbine blades out of bamboo. And it's lighter, it rotates much faster, and it's cheaper, and at the end of 25 years, you can make it into furniture and flooring. It's recyclable. So we introduced them to GE in China, and they are currently researching together to see if they can joint produce a project.
Do we know the name of this?
Actually, it's going to go into our next fund. I cannot disclose it yet. More to come.
Okay, that's fine. The last question, just on the manufacturing, another hot issue here is labor is no longer cheap in China, and that's changing the way American and other multinational companies do business there.
That's right. We're seeing, we're really at an inflection point. We're seeing a huge change, a sea change in what made China great. They have been a global anchor of inflation, manufacturing things cheap for the rest of the world to buy. This is changing after Foxconn. The average wage now is up 30 to 40% across the board for these type of workers. And in other areas, for instance, truck drivers have 10% increases. The chefs, the nationwide chefs in China, they just got, I believe, a 20% increase over the next 5 years. So absolutely, the wages are growing anywhere between 20 to 30% over the next 5 years annually. And this will create inflation. And that's why I think we're seeing a huge change, a sea change in terms of the structure. No longer will we on the United States and elsewhere see very cheap Chinese goods. We're going to start seeing a major shift.
It fits into your sunset picture of the exporters and the manufacturing sector. I mean, how big of a hit is that going to be for the economy, which right now is still dependent on exports?
Right. Of course, it's gradual, but at the same time, consumer demand is huge. You're seeing that domestically the consumers are beginning to spend at about 4,000 to 5,000 GDP per capita. If you see what happened to Hong Kong, Korea, Taiwan, and even Japan going back to the 50s, that's sort of like an inflection point where the economy really takes off, 4,000 to 5,000 per capita. And that's because you have discretionary income, not only for travel, but for luxury goods, and also in terms of excess funds to invest in the stock market, to put into mutual funds, to get several credit cards. So we're seeing an explosion in the financial industry, which is why we're exposed 50% in the financial information services area.